6 months ago, I did my income tax annual review and I went through some of these tax reliefs that I forecasted that I will be getting for year of assessment 2024. And if you're new to channel, my motto is always what I think, I will say. What I say, I will do. And what I do, I will show. So today is the showing part already. Therefore, in today's video, let's give an update of the actual income tax relief that I've gotten from my recent tax bill received from the Inland Revenue Authority of Singapore, or we short form that as IRAS. And if you want to learn of the best tax strategies, asking personal finance questions regarding to your situation, then come and join us at over 15,000 members at the Honey Money SG Telegram group. I understand that there are a lot of numbers, especially for income tax, and so many acronyms that I'll be using. So let's go through some of them. So YA2024 means Year of Assessment 2024, which means they are calculating based on your full year 2023 annual income. And most of you would have received a notification to file for your income tax from 1st of March 2024 to 18 April 2024 for your 2023 year income. By the way, if your employer is on the AIS Auto Inclusion Scheme, you don't have to manually file your taxes because it will be auto-populated by your employer. So your payroll or HR have to submit the salary and income data to IRAS. But the thing is, you still have to pay for your own taxes. Singapore taxes is quite different from other countries. Other countries, they will withhold a portion of your salary and pay to the tax authority. But Singapore, you still have to manually pay it yourself. And by now, in May 2024, most of you will have received your tax bill, or we call that NOA, Notice of Assessment. Unless you're reporting self-employed income for the first time, then it may take a few more months, because from my experience, when I was reporting my self-employed income for the first year, it took IRAS until September 2022 to report my 2021 self-employed income to finalize it. So that is some data point for some of you. Maybe your last year was the first time you did self-employed income. So don't worry, IRAS will not forget you. It's only when they will send you the NOA. Let's talk about some of the income tax reliefs that are easily confirmed. Firstly is the earned income relief. I forecasted at $1,000 because this one really no dispute lah. You got work and you are below age of 55, you'll get $1,000 of tax relief from earned income. And it is auto included, so there's really no need for you to fill in anything. Most of you working around the same age as me, below 55, you'll get $1,000 off the chargeable income. Second one that is quite easy to confirm is the NSMAN relief. So last year I did serve my high key in-camp training, which means that I've attended NSMAN activity. So that will be $3,000 off the chargeable income. So forecasted $3,000 NSMAN relief, actual $3,000 NSMAN relief. Very easy one. Next one that's easily confirmed is also SRS Supplementary Retirement Scheme, which is a form of deferred tax savings account. So last year I contributed $15,300 to the max as a Singaporean. This is also auto included in the income tax file, so you don't have to manually input it. Your bank will submit your details to IRAS. And last year, I used the SRS to subscribe to the Singapore Savings Bond. If you're interested to subscribe in the SSB as well, I think the current issue is like 3.33% for a 10-year yield. So it's not too bad as long as it is above 3% and you can lock in the yield for 10 years. I think it's a fairly good long-term retirement planning strategy. But of course, that's not financial advice because everyone is really different. 3.33% may be low to some of you, maybe high to some of you. So whatever I say, just take it as financial entertainment will do. Alright, so all these are really easily confirmed tax relief that I forecasted to match my actual income tax relief. But how about others that I'm not too sure about? I'll go through them after a word from the sponsor. Webull introduces the Moneybull Interest Booster as a new reward in the welcome promotion. And if you sign up via my exclusive link, you get this exclusive gift, which is 180 days of 3% Moneybull Interest Booster, where you can get up to 8.4% per annum return. And there is a maximum of $10,500 based on 250,000 USD Moneybull subscription. And this is calculated based on the potential 5.4% 7-day USD yield per annum of the USD cash fund in Moneybull as of 25th March 2024 and a 3% USD yield per annum from Moneybull Interest Booster after 180 days generated from the first 250,000 US dollars Moneybull subscription. For those asking what Moneybull is, this is a wealth management tool designed for margin account to earn a yield on idle cash while maintaining liquidity. How it works is that the yield is generated by automatically investing your idle cash into underlying cash funds. You can continue trading even when your funds are in Moneybull because 99% of the
market value of your Moneybull position will be added to your buy power for trading purposes. The funds from your Moneybull position will be auto-redeemed when you do not have sufficient cash to settle your trade. There is also a transfer in due for both new and existing customers who have not done any shares transfer to Webull.
There are 3 transfer in tiers from $10,000 to $150,000 worth of shares,
and maintain for 90 days to get up to $2,000 of cash vouchers plus a bonus of $500 trading vouchers plus a transfer out fee subsidy of up to $150 with my exclusive link. Terms and conditions apply. So don't miss these offers. Use my exclusive link or scan the QR code right here to get your Webull account today.
Alright, welcome back. So next up, let's talk about Parents Relief, because this is the first time that I'm claiming for this. The fact is that my mother, she has stopped working since year 2023, so she has 0 income, which means that I could claim for Parents Relief, which the requirement is that your parents should be age 55 and above and less than $4,000 in annual income. This relief can also be shared between siblings. But how much is the relief then? Because if you're living with the parents, you can get $9,000 of tax relief. But if you're not living with them, you can get $5,500 of tax relief. And if your parents are handicapped, you'll qualify for an even higher tax relief based on this IRAS table. So I have no siblings, no one to share the $9,000. But if you are sharing with a sibling, just make sure you all discuss beforehand. Maybe the one with the higher income should get everything, then maybe give you some form of discount for the lower paying sibling. I also want to make a point, right? The parents relief cannot be stacked with the spouse relief. So what that really means is that, for example, the parents, your father is working, your mother is not working, and then you are working as a son or daughter. If your father has claimed spouse relief on your mother, you and your other siblings will not be able to claim parent relief in respect of your mother. So that you may have this question, should the husband claim for the spouse or should the children claim for the parents relief? I'll give you a very simple mathematical conclusion. So if you look at IRAS table, the spouse relief is only $2,000 to $5,500, and that is much lower than the parents relief. And most of you, if your parents are 55 and above, you are likely at the age of late 20s to early 30s, right? So you're at your prime earning age, while your parents are near the retirement age, and they may be earning a much lower income. So it's probably more beneficial for the children to claim the parent relief than the husband or wife to claim the spouse relief. At least that was a situation for me lah. I mean, $9,000 of tax relief, you know. But one thing for this parents relief, you have to manually input yourself for the first year. Then subsequent year, maybe it will be auto-populated based on some comments that I received in a previous video. So if you look at my overall total non-CPF tax relief, I have $1,000 from earned income, $3,000 from NSMAN, $15,300 from SRS, and $9,000 from parents relief. That's a total of $28,300 of non-CPF tax relief. How about the CPF tax relief then? Because I think that's what most people are confused about. In my previous video, I shared that my 2023 income will be hitting the CPF annual limit of $102,000, which means from my employee side of contribution, I will be contributing $20,400, which is the CPF tax relief. Because employee only contribute 20%, right? So 20% times 102,000, that's $20,400. Then I also had self-employed mandatory contribution to my Medisave of $4,000. In my previous video, I mentioned that it was 4,000 VCMA. Not correct, because for self-employed, it's not VCMA, that's mandatory MA contribution. So $4,000 on top of that $20,400. Therefore, the mandatory contribution of Medisave for self-employed person will not count in the VCMA cap. Okay, I need to make this correction. So if you look at my NOA, the actual income tax relief for mandatory CPF contribution was around $24,000. Then I also shared about my voluntary contribution to Medisave account, right? Because I did do a $2,500 contribution to my Medisave account when the basic healthcare sum BHS was raised by $2,500 on the 1st of January last year. And I also top up $1,000 to my Medisave account when the deduction happened for the Integrated Shield Plan and CareShield Life Premiums deduction. Also, to make it clear, you only get tax relief when you top up to the MA. You don't get tax relief when you pay for the premium lah. Some of you asked me in the comment section last time. So the actual voluntary contribution to CPF tax relief was $3,544.50, which is very close to my forecast, so everything went on as planned. Therefore, if you look at my total CPF tax relief, that's $24,023 from CPF mandatory contributions and $3,544.50 for the voluntary contributions, which adds up to $27,567.50. And if you combine my overall tax relief from the CPF and non-CPF portion, that is $28,300 from the non-CPF tax relief relief, and $27,567.50, totaling to $55,867.50 of tax relief, which is reflected in my income tax bill. So yes, I hope that this has been a good financial exercise and entertainment for some of you, but that is only part of my individual income tax strategy, because for reference, I already incorporated my own company since January 2023, and that's for tax advantage reasons as well. And my current status is, with my company, I'm employing myself as an employee, so I pay myself a fixed monthly salary every month. Therefore, I'm not considered like the real self-employed person by IRAS guidelines. Then some of you who are self-employed may have this question: what is the difference if I incorporate a company? Because if you really study how the income tax system works, you realize that if I charge everything to my individual self-employed income, I'll be paying so much more income taxes, like a few thousands more. Therefore, if you're a freelancer or you're self-employed, then you're thinking whether you want to transit to incorporate a company instead of posting under your self-employed income. What are the benefits and the costs? Then I do have a B2B consulting service if you are considering to upgrade from a sole proprietor to a private limited company owner. And in this call, I'll walk through my step-by-step process and answer some of these questions that you may have, because so many of you has DM'd me privately and really cannot work with my limited time capacity. Do note this is a B2B service, not B2C service, so I'm really targeting a very small group of people. But if you're not self-employed and not in this stage, you just want to look at basic income tax strategies like I mentioned in this video, then I can walk you through what I've planned through in my income tax strategies for last year right here.